In the early hours of the Asian session, we are seeing the markets dramatically sell off. And in today's video, what I'm going to be doing is taking a look at the markets for this week and a little bit of a focus on risk aversion, which we are seeing come back into play right now as two main charts take the focus of this video. The first thing I want to talk about is, of course, the S&P 500, and then I'm going to cover the US dollar. And for those of you guys who are trading currency pairs or trading commodities like gold, this video is meant specifically for you. If you're new to the channel, make sure to hit the thumbs up button and subscribe, because a lot of you guys are not yet subscribed yet, and we're going to jump right into it. Okay, so actually I am going to start with the dollar here today. So this, you guys, this is dollar bullish confirmed. And we have to talk a little bit fundamentals here for a second. Last week we had CPI come out, which put us at 8.6% inflation for the year. Guys, that's scary. Inflation is no joke when you realize that basically high levels of inflation hurt everybody. And I'm going to give you guys a little bit of a weird fact that I read on Instagram today, which I don't have the stats for. I should probably be more prepared and show that to you. But basically it was a statistic or figure from a lot of people, or statistics from clubs and restaurants in the US where activity has been declining dramatically. And the reason I wanted to point that out to you guys is that if people are not going to restaurants and clubs, think about this for a second. When do you go to the club? When do you go? I don't know when. I don't really go to the club that much, to be completely honest with you. But if you were the kind of person that goes out to bars or clubs or restaurants and parties in Miami or whatever, when do you usually do that? You usually do that when you have money to spare. And when the consumer has no money to spare, and inflation is rising dramatically, and mortgage rates are up, it's a scary scene. So fundamentally, the dollar is back on top. In my personal opinion, this week, we are going to be watching very closely to see if we take out the previous highs on the US dollar. And I'm not going to lie, it looks pretty likely to happen. We just put in a higher low, and we are seeing max pain for markets ahead of this week, as in the Asian session, we basically sold off like right away. So what do we do about this? What are the setups, Nick? What are we trading? Well, I'll give you guys my thought. I do have my CAD Swiss trade open. That is one trade that I'm in. So I'm up 75 bucks. You know, that's basically breaking even with inflation right now. I got to make 75 bucks a day just to stay break even. But anyways, I'm looking at a couple of different currency pairs, especially things like dollar yen. And look at this, you guys, we got the break. I literally made this video this morning talking about I would like to see if we could break out for a potential pullback buy. There it is, dollar yen pullback buys are in my my watch list. They're in the radar for me. So I'm looking for pullback buys on dollar yen. Possible ideas could include looking for a pullback to structure here with relatively tight stops, because I do understand that the dollar is sort of momentum breaking out right now, at least going for a 2-to-1, but really trying to hold on to this thing and let a winner run. We'll talk about gold in a second, and then I want to show you guys something here on the Edge Finder. So added some new features to this, and one of the things that I saw that was really peculiar, okay, is look at this, okay? COT data. If you guys aren't familiar with COT data, let me just give you a brief rundown. The Commitment of Traders data is basically a weekly report that tells you and I what institutional positions are like in the US. It is a required submission that big institutions, banks, hedge funds, they have to report it. Okay, why does that matter to you and I? Well, right here, we can see what has been attractive to investors recently. And not just retail investors. What I'm talking about is institutional investors. The big players are buying oil. They're long oil. They're long South African rand, which is a little bit of an interesting one to me. The US dollar, gold, and the 10-year, which, by the way, has strong correlation to the USD JPY. Okay, so why does that matter? Well, there's something else here I want to show you in just a second, retail sentiment, when we talk about some currency pairs to trade. Dollar yen is one of them, though. Dollar yen is heavily short. In fact, if we switch this to the lowest long percentage by retail traders, only 21% of retail traders are long on dollar yen. Opposing that is they're basically 79% short dollar yen. So that sets me up for a lot of potential on dollar yen longs going into this week. So USD JPY is a pair that I'm looking for pullbacks going into this week. We just added this currency strength chart, by the way. I think this is awesome. You can see which currency pairs are on top, and look at that. The top three, you guys, are dollar pairs. Got a lot of dollar bullishness, and at the bottom, couple USD pairs, GBP USD, which I want to talk about here in a second. Okay. Notice also that on this list, that nowhere near the top, there's no pound, right? Look at the top of this. Retail sentiment, the crowd is buying pound dollar. The crowd is buying euro USD. Okay, we have that information. Let's head back to our charts. Before I do head back to the charts, remember, pick up a copy of the Edge Finder. There's a link down below in the description. We are very much, we've been working really hard on this software tool, and we are ending our sale. There's a 40% off. That is a massive discount on the software tool if you'd like to try it out. Get the link down below in the description, punch that in, use the promo code that's down there, and you'll get a major discounted rate on the software. Okay, look at this, you guys. Dollar yen, as we're recording this video, is still breaking higher. Okay, so I do want to short these pairs, but what can I do? They've gone far away from me. Well, we have to be patient, as much as it is hard to do so. I still like the idea of shorting these, Euro USD and Pound USD, but I need that pullback. We have targets looking at potentially making a move back down to the previous low. As dollar strength comes in on CPI news from Friday, there is nothing but strength for the US dollar until we get something that changes that. But right now, again, looking predominantly for pullback sells on things like GBP USD and Euro USD. We got to talk about gold. I mentioned I like gold long. If we can break out of this candle here, a little bit of a headwind for us. We need to break outside of this, close outside of this. Any pullback, I like the idea of longing gold. I mentioned that earlier today. But again, go back to the Edge Finder. Gold is up there. 73.56% interest in long on gold. Another one that's really interesting is oil. We didn't discuss oil in the Sunday video. I know I've got 2 Sunday videos today. You guys are getting too much of me today. U.S. oil, I still like long, so there might even be some pullback buys on this guy, possibly. And how I would personally trade it is I would actually go trade the Canadian dollar pairs. So I may get a chance to build a position on my CAD Swiss if I'm incorrect about this in the short term. Again, I've got 75 whopping dollars on my CAD Swiss position open. But we're looking for longs. We're looking for more upside on oil, and with that, looking for CAD pairs to head higher with that. So we'll see if we can make some money on that. This is a trade that I shared inside of our VIP group. So if anybody is in there who is watching this video, please note I will be updating positions for you guys to see. When I do that, you'll get the update. But I've still got my CAD Swiss trade open. I still have the risk on the table, so I have not moved my stop loss. You can see my stop loss still right here. So I still have my stop loss order open. If this thing goes against me, I will take a loss on that. But ideally, what could happen is I'll see this thing rally past the highs. If that happens, we'll probably look to trail stops to break even. That would be excellent, and we can go ahead and lock in at least a break even trade on CAD Swiss, but we'll see. We're speaking a little preemptively there. But yeah, I wanted to point out again the indices coming down this hard like this. And guys, we haven't even talked about crypto. I mean, who talks about crypto anymore? But look at this. I mean, holy goodness, man. That's insane. Right on the open here, we went from 29 down to 26. We lost 10% of Bitcoin value in the matter of couple hours. That's insane. I mean, and as a longer term holder of some Bitcoin, you don't like seeing that. And one thing I will say is we're getting awfully close. We're getting awfully close, you guys, to a breakout. You might say, Nick, I don't trade Bitcoin. Well, this is just a good technical study. Look at this. We basically did not hold this support level. We broke underneath it. And now the last line in the defense of any bullish opportunity on Bitcoin, I would say, is around this 26,000 level. I mean, if you take that out, who knows where we go? I mean, where do we go? You know, market structure doesn't offer really much support until you get down to 20,000. So are we going to see a fall down to Bitcoin 20,000? And what does that mean for other market investors? or traders. You know, what does that do to the gold market? What does that do to the S&P 500? Well, again, it doesn't look good. We're selling off really hard here in the opening hours of the Asian session. We could also take a look at Japan 225, see what's going on with that, and not pretty, you guys. Take a look at Germany 30. Not good. The indices selling off yet again. We're seeing this ugliness just continue to be a problem. Take a look at Ethereum here for a moment. Look at this. Holy goodness. Ethereum at 1367. That's an incredible sell-off. Something that was so incredibly bullish. And look at this, you guys. This is what's happening. We are watching this unfold in front of us. I'm telling you guys, this is history in the making. This environment is a inflation, money pumping into the system. Everything is good environment. This is the after effect of putting too much money in the system. And we're not here to get political or anything, but at least we can address it in terms of the Fed. You know, the Fed has this huge mess to deal with, and now we have seen the tone shift so dramatically. And you might say, Nick, what does Ethereum have to do with the Fed and inflation? Well, everything. Unfortunately for the crypto guys, would have liked to see the stock market come down and Bitcoin fly and Ethereum fly as a hedge against inflation. It's not happening. We're seeing Bitcoin and Ethereum do exactly what risky assets tend to do. They sell off with the stock market, and in this case, even get hurt more than the stock market. Stock market's down, 25%, 30%. I've lost count at this point. From the highs, Bitcoin's down 63 from the highs. Of course, that's Bitcoin. It does that, but you just have to pay attention to that stuff. So when we take a look at the dollar, which is flying high, it has no end in sight. And that's the problem with this inflationary situation, is that the Fed has gone from this word of transitory, right? Did I spell it right? Transitory. Yep. It's gone from that word transitory. We think inflation is transitory. And now it's gone to a different direction. It's gone to, we think it's peaking, right? And maybe it is, but remember, they said it was transitory, and now we're sitting at 8.6. And that's killing the American people. I mean, it's killing people around the world, people in UK, people in Europe and in Asia and all over the world, right? This inflationary situation has ripple effects in every direction, and consumers are getting hurt by this as their money is worth less, as prices are rising everywhere around us. Here's a couple things that have really been dramatically rising: gas, groceries, sorry for my writing so slow, and rent, okay? We all, with the exception of homeowners, we all pay all three of these, right? When you have a situation in which all three of these are going up, while the value of your money is going down, and job wages are not going up because businesses are also hurt by this. If everybody, people will complain about jobs, but here's the problem. There's no easy solution here, because think about it this way. All these people, everyone is paying more at the pumps, at the checkout line, and to their rent or their mortgages or whatever, right? If you think about that, you pass that on to what that does to consumer spending. Consumers are less willing to spend money. They need to save money because things are going up in price, and it's hurting them. Well, businesses also get hurt by that, and they're not able to raise wages because they're earning less money. There's less profit to be made in the business, and the businesses are sitting there like they don't want to lose profit because then the value of stocks go down, and that's exactly what we are seeing. We are seeing that being put on the table for businesses to deal with is, hey, consumer spending probably going down. Inflation hurting the margins on businesses. Everybody wanting a raise, can't give raises because there's no money, right? The money is drying up. And this is what we're seeing. Another thing that we could take a look at is, take a look at bank stocks. Bank stocks should be going up, right? Because, again, interest rates rising. Doesn't that mean they're going to make money on their lending? Well, not if there's not willingness to take loans or, people who want to get houses and stuff. The banks are under pressure as well. JP Morgan, a stock that I personally own, down tremendously, right? You know, I mean, I have a longer term perspective on most of my stocks, but still, the point is, look at how bank stocks are moving lower. And what's going up? What's going up? Energy sector, flying high. Due to the Russia-Ukraine situation, still seeing this thing fly to the moon. So it's crazy out there, you guys. And you know, rocky roads ahead, rocky roads behind. At this point, the whole road's rocky. If you enjoy my videos, please do me a favor, smash that thumbs up, subscribe. I'm going to be with you guys the whole journey throughout this whole process as we go through this inflationary apocalyptic market right now. Thank you for subscribing. Thank you for watching. And remember, take advantage of the Edge Finder sale, 40% off down below in the description. Thank you guys so much for watching. See you next time.